Welcome everyone back to another episode of Market Talk. We have my business partner Jeffrey Kalafut, and our guest today is Giovanni Cortese from Scudo Agency. Thanks for joining us, my friend.
No problem. Thanks for having me.
Good to have you
So,
again, Giovanni.
Thanks, Jeff.
so we wanted to have you on to answer a bunch of questions. What's happening in the insurance industry? We're seeing rising premiums, fewer policies available, and insurance providers even pulling out of some states.
hmm
We've also heard of some kind of horror stories in regards to people buying homes and then all of a sudden the insurance company coming back to the new homeowners saying they need to replace a roof, or they get a policy, move into their own house, and they're also getting letters saying, hey, we're not going to be renewing your policy. You got to find something else. So this seems to be a reoccurrence more frequently now than previous years. So we want to get some insights to, give some new homeowners what to expect in the coming
It,
future.
it's a lot to
Yeah,
unpack. So
of course. I'm ready
give,
for it.
give us the cliff notes, Giovanni.
Yeah, absolutely. So yeah, there's a lot to go, but if you want to start at a higher level with the industry in general, you are seeing raising rates. You're seeing renewal rates go up, and you're seeing carriers limit availability of their products, and all of that is stemming from underperformance with underwriting. You're seeing national disasters increasing, so property losses are going up. What that does is a trickle-down effect. So the reinsurance markets give less favorability and leverage to the insurance carriers that you and I or any of your clients would use. So
Mhm.
when they have less capacity, they start to scale down. One of the methods of scaling down is by increasing scrutiny with underwriting on current business and on new business. So if you start with new business, you'll see that the eligibility has decreased. So whereas you may have had 10 options 3 or 4 years ago, now you may only have 2 to 3 options, right? So now as a consumer, when there's less supply in the marketplace, the price is naturally going to go up and it's going to be harder to find the right fit for you.
Mhm.
And then they also look at their current book. So I have carriers that I've been working with for my entire career, and I had never seen them really reinspect their book of business to the
Mhm.
level that they're doing now.
Right.
So you have clients that have been with an insurance carrier for 8 to 10 years, let's say, and they're just getting re-inspected. They're getting letters of recommendations for repairs for what's called loss control. So basically, the carrier is trying to minimize the chance of a loss, or they're really just trying to get off of that piece of business. So they make the terms harder for the insured, less time to make repairs, more items to fix, bigger items to fix, more expensive. And that leads some insureds to say, you know what, I'm just going to jump ship
Yeah.
and find a new carrier. So there's kind of two things at play with the new business and the current business. Now, in terms of recommendations, what I like to tell my insureds and what you guys can tell potential buyers is when you're looking at a house, especially if it's, being sold as is, um, there is some diligence to be done in terms of what you can expect. State inspections, appraisals, they're usually not as strict as an insurance company will be, especially in this market.
Mhm.
So when the inspector says, "Hey, this roof's good to go," right? Okay, well, how old is the roof? If it's 15 to 20 years, the insurance company is likely going to have a problem with it, but the state will not.
Mhm.
So in a good market, and you probably know this better than me, in a good market, you could get seller's concessions. The buyer might have more leverage. In the
Right.
current market that at least I'm seeing, the buyer has very minimal leverage. You're waiving appraisals, you're waiving inspections, you're buying a house as is. And when that means as is, it means a potential insurance problem you're inheriting, right?
Mhm.
So the one thing to do is kind of just
That's
budget for it. The lenders don't always do that, but budgeting for the insurance is important. And then we could talk about this, later on, but depending on what you're doing to the house, if you're updating it, you need to make sure that the insurance is applicable. Some people will keep their homeowner's insurance policy that they had with closing, do a renovation, and just not say anything and kind of just keep that policy. Um, that could be okay, the problem is, while you may have an active policy on paper, if God forbid you had a claim, there's a strong chance the carrier can wiggle out of paying that claim because the carrier doesn't want to cover ongoing construction or ongoing renovations, especially if the home's not occupied. So if it's something small and cosmetic, like you're painting a bathroom, you're taking out a carpet, you're living there, but it's some small work, that's typically built into the underwriting process. If you're buying a house and not moving in for 3 to 6 months because you're gut renovating it and you keep that homeowner's policy, it'll be good by the bank, it'll be good, it'll be active. But if there's a claim, there's a very strong chance the insurance carrier won't pay that claim.
Interesting.
Interesting.
Wow. All right.
So Giovanni, I have a question for you, just kind of to piggyback off of this.
Mhm.
I currently have a property listed for sale, and one of the biggest issues we've been dealing with is a roof, right?
Mhm.
Now we know the roof needs to be replaced. It needs to be done, right?
Yeah.
We're selling it as is. It's a relocation property.
Okay.
What are the chances anybody would even insure that house?
So a standard carrier, admitted carrier. So there's two marketplaces in insurance. There's admitted and non-admitted. So
Okay.
admitted is where your preferred risks are going to go, preferred
Right.
homes. When you don't fit or you don't have any options or the price is too high in the admitted market, you can go what's called surplus or non-admitted. There are carriers that will write that home but exclude the roof or damage from the roof. Now, when you're dealing with financing, you need to make sure that the lender is okay with a non-admitted product. So you have
Right.
two levers, right? So, hey,
Right.
yeah, I can get it insured if it's a cash property and there's no lender, then
Right.
it's pretty easy, not pretty
Right.
easy, easier.
Easier. Yeah.
Sure, let's say that. Now, when there's lenders involved, they're saying, here's the requirements. You need an A or A plus rated admitted carrier to meet this loan.
Right.
And if you have a problem with the roof, that's going to be a hard situation for your potential client or
Okay.
buyer.
And to add to that problem, this house was built in the 1700s as
Okay.
well. So
Yeah.
that just adds another layer of
Yeah,
complication.
and definitely. So like we talked about, right? So now the carriers are with new business, they're kind of tightening the guidelines, right?
Right.
So whereas
Right.
they may have done homes in 1700, now they're saying 1900s and more, 1950
Right.
and more, right?
Right.
Whereas back in maybe 4 years ago, they would have written that house no problem.
Right.
So
Right.
yes, you're starting to see a smaller scope of carriers that are going to offer coverage for a house, that's built in the 1700, 1800s.
Right. Right.
Yeah.
Are we going down a road where when a client goes under contract and we do home inspections, are we going down a road where not only do we have a home inspector show up, but we have an insurance inspector show up as well? Because you're potentially, say a roof, 30 grand, an
Yeah.
unforeseen thing,
Yeah.
and a buyer doesn't want, or a client doesn't want that surprise as soon as after they close. And then all of a sudden the insurance company does their inspection and they're like, oh, by the way, you need a new roof.
Hmm.
So I don't know, maybe maybe because obviously the insurance industry is making some drastic changes and being a lot more strict and maybe wanting out on some properties to reduce liability, that maybe that has to be added into the mix of the process prior to closing.
Definitely. It's something that you should definitely monitor. Insurance companies generally use third parties as their inspectors, and then that inspector then sends the report to the carrier for assessment. So you're having, two different layers there, but it's definitely a good idea to specifically note roof and the condition of the home. You don't see it as much anymore, but things like oil tanks, things like knob and tube wiring,
Right.
things with older units and appliances. And I can give you guys guidelines on what I see for my carriers, but basically they're looking for everything to be updated within 15 to 20 years. So if you're teetering on the edge of 15 to 20 years with any of your utilities, your roof, it should be a flag in your guys' head for, hey, there could be a problem with insurance. And it's not guaranteed. Every carrier has
Right.
different inspections, different guidelines, different severity, different tolerance, different lenience. Like I've seen some carriers say you have 60 days to replace the roof, even for a new buyer, and that just seems very harsh. And you have
Yeah.
other carriers that say we'll give you to the end of the policy term. which at least is some more time, right?
Right.
So, you
Now,
know,
Yeah,
can I,
because some
go
some
ahead.
people, especially buying a new property, they just, went through their savings to put the down
Exactly.
payment down, and then all of a sudden, no surprise, you have to put a new roof on your property, or else we're going to cancel your policy
Right. And then you have a
within.
loan to worry about because if the policy gets canceled, then you're not meeting the
Right.
requirements of the loan. So
It's
there's
horrible.
definitely a lot of factors to consider. And considering that the market is very seller friendly right now, I'm
Yeah.
seeing a lot of mine shirts stuck in the same situation. And I wish I could get to them sooner, but just due to the cycle of how they've got to me,
Yeah.
they already bought the house. They already have the loan, you know.
Right.
So my advice and what I'm telling them recommendation wise doesn't help that much. So it's great for you guys to have this knowledge, have this power to help your buyers in this process.
Hmm.
And then, there's other things you can do in terms of just demonstrating compliance, right? Some carriers see it very black and white and they'll give you the 30 days to fix it or they're canceling it. Other carriers are a little bit more lenient, and if you demonstrate compliance to fix these things, hey, I just purchased this house. It's my first house. I have an estimate for the roof. I have an estimate for the heating to be replaced. I have an estimate for this. You're showing, hey, I want to get this stuff done.
Hmm.
I want
Right.
to fix it up to your standards. I just bought it. I'm tight with cash. Can you give me to the end of the year? No guarantee they'll say yes, but it's always good to be preemptive rather than trying to work backwards. Once a
Hmm.
notice of cancellation goes out with a firm date on it, you're fighting against an underwriter that just wants to cancel it. Whereas if it's
Right.
a recommendation with no date, they're looking for compliance. And if your buyer, if the owner of the home is already ready and is in the process of doing that, instead of just kind of waiting for things to happen, you have a better chance of recovering, staying on that policy, getting an extension, which is huge in this marketplace.
Hmm.
So that's what I usually recommend to people that get stuck in that situation.
so when someone's in that situation, say the insurance company comes out and says you need a new roof, are does the new homeowner have an option to find a new provider that would still insure it with an older roof, that it's not leaking and there's no current problems with it?
Yes, but I would caution it that if you tell the new carrier about the problems, they're going to be very reluctant to issue a new policy, right? So if I go and try to be preemptive and say, "Hey, do you want to insure this house?" The other carrier's canceling it because the roof's old. Well, then they're going to say, "Oh, well, if they're canceling, I don't want to write it either," type thing.
Right.
Now, if you keep it hush hush and just move, right? There's no document on nothing documented trail saying that you have to say something. So you're just hoping that you roll the dice and hope that the new carrier is going to be more lenient. You might just be right back in the same situation 30 days later or
Hmm.
60 days later. Or they're not as strict with roofs, or they're not as strict with whatever the other carrier may be,
Hmm.
giving you a hard time about. So my answer is it's not really the best strategy to move carriers when the risk itself isn't eligible or is being questioned. You need to fix the problem at the root. Jumping ship and trying to find a new carrier may be a temporary solution, or it might just put you back in the same situation with a delayed effect. Now, sometimes that time is enough to get the funds together. It's a time enough to get the work done. So sometimes it can be a nice band-aid. But
Hmm.
generally speaking, if the home's not eligible with an admitted carrier, the standards are going to be pretty much the same across the board for admitted
Interesting.
markets.
And the problem is there's a lot there's a lot of room for interpretation. Obviously,
Yes.
um, the inspector and then also the standards for each individual insurance provider as well.
Hmm.
So, and you might have mentioned this, but what was the trigger? What was the trigger for all these changes and to
That's
become more?
exactly what I was going to ask.
Yeah,
Yeah.
What led to all of this? Because we've never seen anything quite like this,
yeah.
Yeah. I
before.
think it's and I think we talked about this on our last episode, but it's a really delayed effect from COVID underwriting and the way that the carriers struggled to increase rate or actually blocked from increasing their rates for 2 years while they took losses from catastrophes. And to make up for that ground, they had to increase the rates. They had to shrink their book. They had to get rid of more losses. And the money that they're afforded to underwrite has been limited. So they're basically, their reinsurance carriers are setting a very strict standard for our insurance carriers, which then trickles down to underwriting, which then trickles down to the consumer. So I think that ultimately, if we see some recovery in underwriting, and knock on wood, not as many wildfires and large catastrophic storms, as the underwriters start to improve on their current book, the reinsurance will then grant more funds. And when the reinsurance grants more funds, it's a good sign. It's a sign that means that the markets are going to start to open up more, that eligibility will start to be a little more lenient. Now, I can't promise that it's going to get better like it was like 5 years ago, 6 years ago, but
Right.
I'm seeing already signs that it's starting to improve, and it's marginal. We're
Mhm.
still in a pretty tough market.
Right. I mean, obviously, inflation hasn't helped because of construction costs, so premiums would have to go up for that. God forbid
Exactly.
there's something were to happen. And I've read that from 2017 to 2023, there's been an increase in 34% of premiums.
Mm,
So, I mean, and that's crazy. What do you now? What are state-backed insurers? What does that mean? Like, what is happening in so, like, for instance, like Florida?
right.
Like,
Florida's a crazy market. Yeah, so you have all these carriers that are basically saying, no way, we can't offer a rate that's sustainable enough to underwrite business here because of the amount of catastrophes that they take the wind damage alone. Then you add the hurricanes and the rain, and so they're unable to perform. So what they do is they back out of the marketplace. And essentially Florida right now, as far as I understand, has only two markets that are writing new
mhm.
homes, right? So
Yep.
it's a rock and a hard place. So you either self-insure, if you don't have a loan, then you can figure out your creative alternatives. But basically all they're saying is the carriers are saying we can't write business here. The market is too difficult. So the state then steps in to provide a solution for consumers, which is honestly like the penultimate step, for having almost no insurance market. It's really hard for people in Florida. I don't write in Florida because they make it difficult for alien agents or people that don't reside in Florida to write business
Mhm.
down there. And on top of that, even if I were to be able to get access, I can't do much. It's just
Right.
it's two different carriers. If you don't go with one, you go with the other one. So there's not much an agent can do to help you out.
Right.
That's crazy.
Interesting.
Yeah, and sorry to just add up. So the New Jersey coast, like our coast, like kind of follows that market. So it's not as bad. But
Right.
as you go up the coast, the Carolinas, and then into New Jersey, like down the shore, you start to see similar effects. So if you wanted to write a new home down the shore in New Jersey, you're going to find a pretty tough market. There's very limited options to do so
Hmm.
because the underwriting starts in kind of in Florida.
So, go ahead, Jeff.
Now, so as far as like our Jersey Shore homes, like what kind of pricing are we talking roughly? Like just like, I don't want to say your typical $1 million home along the beach or within,
Yeah.
within a few blocks.
hmm
What's that looking like as far as costs?
I
What kind
mean,
of a
I'm seeing
range?
some crazy numbers, to tell you the truth, Jeff, but there's always
Yeah.
different parameters. I mean,
Right, of course.
so what I would recommend is the the owner or the buyers always needs to be willing to try and combine their policies. And that you hear it a lot on these advertisements and bundling and things like that. But what it
Right.
what it really does is gives a carrier just a little bit more meat on the bone
Right.
to consider it. So,
Right.
and then the other option is look at your primary carrier. Will they extend coverage to your secondary? And that's a favor. That's not
Right.
something that gets done often, but
Right.
sometimes if you're a good insured, you have a nice home up in, let's say, Morris County, you bought a house
Yep.
down the shore, try to see if the primary carrier will extend coverage down there as a start. Um,
Interesting.
it's not a guarantee either, but that's a strategy that I often recommend to my insureds. Give the carrier more to underwrite. So now they have your
Right.
primary home, they have your auto, they have your umbrella insurance. Maybe they have some
Right.
personal articles, and now they're adding a home, right? It's easy for
Right.
them to
Right.
digest that. If
Yeah.
you go monoline and just try and get that homeowner on its own without anything else backing it up, they're a lot less likely to grant that favor.
Yeah.
Um, and then, in terms of pricing, I've seen anything from like 2,000 to up to 10,000 and for a regular house because you
Right.
have coastal proximity, you have wind problems. Some of the homes aren't elevated, so they just don't want to touch it. And then the carriers that were writing down there, a lot of them pulled out. So they'll luckily renew policies, but you can't
Right.
market that policy. I mean, you're going from 2,000 in premium to 8 for probably less coverage if you
Yeah.
remarket. So it's kind of just like knock on wood, keep the house in good shape, right? And make sure that there's no reason for them to come out and cancel you, whether it's making sure you have the home in good condition or whatever you can do.
That's crazy. The
Wow.
costs have gone up so much.
Yeah. Yeah. And there are strategies, but again, you have to just be as preemptive and proactive as possible.
Right.
Because once they're there, it's really difficult to work backwards.
Yeah.
Insurance does not like to be put into a bind. So if you say, I have a time crunch, I have a crunch, I'm going to cancel this, that, they start to back off very quickly. Whereas if you
Right.
come to them with more data, more info, more policies to consider, you have a higher chance. Yeah.
You almost have to convince them
Yes. Well,
to
that's
insure
part
you.
of my job, right? And that's why when people say they want to do insurance themselves, which is fine, because they're almost directed to do so with these commercials and these, advertisements to say like, oh, kind of
Right.
you're a dummy if you don't know what you're doing. But if you don't do this for a living, it could be pretty frustrating to have to deal with that on your own, to try to convince an underwriter to write a home without understanding the dynamics.
Mhm.
So using an agent is step one. I mean, it's almost always free to the consumer, and
Right.
they'll do that work for you. They'll advocate on your behalf to try and extend deadlines, to try and waive requirements, which is very hard in this market, but I've done that in the past. Hey, they fixed 8 items. Can you waive the other 2? There's 10 on this list, or there's
Right.
12, or there's 6. Okay, they did the
Right.
3 major ones. Can you waive the other 3 or give them an extra year in the other 3? Things like that. And as a consumer to do that on your own, it's a big lift. So,
Yeah.
you just got to be strategic and use your resources. And using an agent is one of the big resources you can use.
Right. Now, when they're doing their inspections, are they coming in the house? Are they trying to come in the house, or is it just external? Like, what are you seeing?
Both. So it depends on the carrier, depends on the risk. There's several factors that will trigger an interior inspection on the carrier side. Or it's just common practice for that carrier to do both. Typically, what I see is exterior only. I mean, I have
Mhm.
some carriers that will just do satellite imagery, right? They'll just look at
Right.
satellite imagery from the past 6 years and to see if there's the roof been
Any
done, to see
changes?
what's
Yeah.
going on with the house, if it's changed, if it's renovated. I
Yeah.
have some carriers that want to come inside, and mainly what they're looking for is utilities. They're looking for updates to the heat, the furnace, the AC, the electric panels, making sure that it's safe in there. So it really depends, honestly, but I would say that's 70-30. I would say 70% are just really more exterior only.
Mm,
And if they have a concern, they'll come in.
yeah. It's so crazy because I mean, a couple of years ago, it wasn't even a thought of like,
Yeah.
hey, we're gonna have an insurance problem.
Yeah. Well,
Wasn't
even
even
if
on
it
the radar.
was, there was just more solutions. Even
Yeah.
if it was a problem, like just from my experience, there are always more options to get out of the rut. Now it's like it's almost impossible. You're really just kind of hoping for the mercy of the carrier, which they don't have much right now,
Yeah.
just given the conditions.
What are some of the things that you could forecast in the future that like might open this market up back? Is it inflation potentially coming down? Obviously the cost of everything, the
hmm
construction costs. Is there any other factors that you might predict that could ease up things?
Not really, just good performance of the underwriting. I think is that one of the major factors. If they can perform well in the next 12 to 18 to 24 months on their current books, I think that's going to open up some more funding, which will then again trickle down, have more markets, more products, more availability, which then drives the demand. Because if you can get option A versus option B, or option A versus B, C, D, E, and F, well, now option A has more work to do to make sure that they're getting new business, right?
Mhm.
So you're kind of challenging the marketplace to give better options to the insureds. Um, and then the other thing would just be if there's any change in, with the presidency, with the legal side of things, sometimes, insurance directly follows our legal system for the most part, especially for liability. So the more liability that you have as a property owner by law, the higher the insurance cost is going to be because there's more to protect. So if there's any ever change with that, or some sort of indemnification for the homeowner, that would help lower. I don't foresee that or forecast that. But that's kind of two things that would change, the current market.
Mm. Interesting. Um,
So we're stuck here.
Yeah.
We're stuck here. We're stuck here and we got to work hard. Yeah. So I've been doing this for 9 years, coming up on 10. And
Yeah.
yeah, it's one of the hardest markets I had to deal with.
Yeah, I can imagine.
Mhm.
Yeah.
I'm sure for you guys too. I mean, it's a
Yeah,
right now a
like
very
Jay said, like, I think Jay, you had it where your client bought the house and
Yep.
the insurance was all set, and then all of a sudden, hey, you need a new roof. Well, what the,
yeah. Yeah.
that's
And there's a
crazy.
there's a like a a time release in terms of you closing, and then you schedule the inspection, and then the inspector comes out, and then they do the inspection, then they send it to the carrier reviews it, and then something happens, right? So you
Right.
think you're fine. Could be a
Right.
month, could be 3 months, could be 6 months. You're like, oh, I'm good. And then
Yeah.
all of a sudden you get a letter in the mail and you're not good, right?
Yeah,
So
no, that's a letter I burn.
so being prepared, preparing your clients, looking for those flags, looking for that roof age, looking for the eye
Yeah.
test, does it look like there's moss on it? Is there gray patches? Is there shingles missing? Is there
Right.
soffit missing? Does it look chipped? Like some stuff's cosmetic, some stuff's just throw some paint on it and it looks good again, right? It looks brand new.
Right.
Other stuff's like, okay, you got to get a professional to do that.
Yeah.
Um, even something as far as, being preemptive if it is a roof concern of getting a contractor out there to go do an assessment. I don't know what they'll charge you. I don't think it's too much, but just getting
Mhm.
an assessment on a contractor's letterhead, right? So you have
Right.
some
Right.
ammo to go against what they're saying. Hey, you need to replace your roof. Hey, here's
No, I don't.
the ex contractor, right? On their letterhead saying that it's in really good condition.
Right.
And that only a minor repair would suffice in adding another 5 to 10 years of useful life, right? Then you go back and you argue with the carrier. If you don't have anything like that preemptively, and now you're up against the clock, as soon as that letter goes out, it's usually a 30 to 60-day trigger. Sometimes there's no trigger, but most of the time there's a trigger of like, this is a drop dead date where you're going to cancel your policy. So if you
Mhm.
don't have the homework done prior, you're scrambling, and sometimes it takes a good amount of time to get a roofer to go out and check it out, especially in
Sure
the winter
does.
time. So if you have these concerns, it's good, like I said, to try and do some proactive steps to just make sure that if it does crop up, you have some documents, some ammo you can leverage, even if you're going to, let's say, Jay, to go back to your situation where you're going to a new carrier.
Hmm.
Hey, this carrier is, not willing to work with me, but this is a letter I have from a roofer, professional roofer. Here's their contractor license number. Here's what they said.
Yeah.
Would you consider it? Right now, there's a lot higher chance that they'll take a look at it rather than, hey, my homeowner who is not a roofer thinks that you should write it. Right.
Yeah. Yep.
So
It's so it really it's like the the attitude of the industry is they're looking for any excuse to let you go.
100%. And that's what the re-inspections do. They
Yeah.
just want to trim the fat, as cruel as that sounds.
Yeah.
They want the old homes. They want the homes that are in good shape. They want the people that aren't taking care of their homes off of their books. Because
Mhm.
if they wrote your home 15 years ago and you didn't take good care of it, well, they've identified you. They flagged you. If they came and re-inspect and it looks a lot worse than it did, well, you're someone that's not putting any money back into your house, right? So they
Mhm.
want away from that if they can, which, is really tough for our insureds because it's not
Yeah.
something we've seen before.
Yeah. Wow. Wow.
Yeah,
Wow. Wow.
gloomy, but I'm hoping that, with good underwriting, it starts to open up a little bit more, but you can only be so hopeful. You just got to be strategic as much as you can.
Yeah. Yeah, it's definitely something to keep an eye on and keep in the back of the mind just as you're going through the process with your clients. Um,
Absolutely.
yeah, something to be aware of.
Yeah. And if you ever need a resource or a reference, you have an appraisal done, you have an inspection done, you're looking at a potential house and, you see something, you could always run it by someone like me, an agent, and just say, hey, this is what we're looking at. Do you see any concerns? I'm not an inspector, I'm not a carrier, but I deal a lot with inspectors and carriers and loss control. I deal with it daily at this point. So yeah, I'll be able to tell you that might be a concern or
Mhm.
something that we need to budget for or address, right? And what's tough is that lending doesn't always factor in, right? The new
Right.
roof, let's say, right? Well, you're at the DTI, you're just barely making it to the house, but they're not factoring. You need a new roof,
Right.
and the seller's not giving you concessions for it.
Right.
So you're stuck. So I've been trying to educate my lenders as well. It's kind of the same situation that, hey, if there's potential, things that need to be replaced, especially the roof or utilities, that has to be somehow budgeted in.
Mm,
to help your borrower.
yeah, definitely. Um, Giovanni, is there anything else you would like to share for the audience to kind of just give them a heads up about the industry or anything to?
Yeah, definitely. I would always say just have like a budget and have a plan, have like a roadmap, and work with an agent as a
Mhm.
primary step. So, especially if you're buying a home as is or an older home, have a plan because your insurance roadmap might look a lot different than what you think on paper. So it may be you're closing with a primary homeowner's policy to satisfy the loan, and then you're doing a renovation. Well, part of that renovation isn't just the construction cost. We have to look at the insurance as well. There's products called builder's risks that give you coverage for the period of renovation. So you're not living there. They're gutting the house. They're going to repaint it, redo all the floors. There's coverage for that. You can get it up, 3 months at a time. So it's a 6-month project. You have that builder's risk in place, and then you switch back to a homeowner's policy after that. That
Mm.
ensures that you actually have coverage because, like I said, there could be a really scary situation where you just renovate the house with the current homeowner's policy. Something happens, even if it's not the contractor's fault, let's say, just say on the weekend, something happens to the house. You go to make the claim and they go there and it's a house that's being mid renovation and there's no proof of you residing there. They might just say, hey, we wrote this as a primary homeowner's policy with your occupancy. Since you're not occupying it, we don't want to pay this claim. And then you're in a really, really, really tough spot.
Yeah.
So it's always talking to an agent and planning, I would say would be my advice.
Yeah.
There's no cost to the insured to do it. It's just time. So you're looking at an as-is house, you're selling an as-is house, you're buying an as-is house. Like you got to consider the factors that go into the roadmap of like, let's say the first 12 months.
Hmm. Yeah. Yeah. Because I mean, one, some homeowners aren't even thinking like, hey, if I do have to move out of this house for a couple of months, do I don't even think they would think that they need to get a coverage like that.
No, because the bank has their paper, right? You
Yeah.
meet the loan requirement. The lender's listed on your policy. You've paid for it. They have a copy and you think you're good to go.
Hmm.
And
Yeah.
no one realizes that until there's a claim, right?
Yeah.
And that's the
Wow.
scary part.
And then there's a lot of frustration.
I mean, pile it on top of, likely defaulting or having to sell a half renovated house,
Right.
yeah, it's hard. It's really hard. So you just need to educate the buyers and the sellers and the lenders and borrowers with knowledge and give them the power to understand like, hey, this is what you would need to do if you plan on making a renovation. Now, if you're just doing cosmetic work, it's okay. Like I said, that's kind of built in. You're just you
Hmm.
you bought a new house and you're cosmetic, you're fixing the tiles in the bathroom, you're painting it, things like that. You're putting a new fence up, small things, but you're occupying the house. That doesn't materially change the way underwriting sees the policy. It's when
Okay.
you have the dump truck and the dumpster in the
Dumpster.
driveway and no one's there and the tarps are up and the ladders are up and you see only contractors going in and out. You don't see the homeowner. That's when we have, potential issues with
Mm,
coverage.
right. Now, if someone was putting an addition on their home, but they didn't have to move out of the house, would
Hmm.
that still be in a gray area?
Gray zone, if you're adding square footage or doing anything with structural, typically you're going to want a builder's risk, even if you occupy.
Okay.
Yeah.
Interesting. Good
Yeah.
to know. Good to
Yeah.
know. A lot of changes happening.
Take that scaffolding down, Jay.
There's nothing going on
Well,
here.
I've seen you'd be
Nothing.
surprised how many times I've seen that, right? They close on the house. I send the COI to the lender. 60 days later, I get a letter in my office. We did the inspection. It's just a dumpster. The picture is just like a dumpster. It's just
Yeah.
like it's half torn down. They're like, we're canceling this thing.
Yep.
Yeah.
So that's actually beneficial for the homeowner because at least they'll know like something's triggered, right? And other times it's 6 months in, they start doing stuff like that. No one knows anything. There's no test to say like, hey, you need to change your policy because the bank's not going to say anything unless you tell the agent. They're not going to know what you're
Yeah.
what you're really doing. So it's the education for the actual homeowner is huge, which is part of my piece and what I try to do with new buyers.
Hmm. Awesome. Giovanni, thank you for the depressing information.
I'm sorry. I delivered it with a smile and a mustache, and I hope that helped sprinkle on some
It doesn't
happiness.
make it any
It
better,
doesn't make
buddy.
it any better.
It
Yeah.
doesn't make it any better. But yeah, thanks for we wanted to, like I said, jump on here and just kind of hear from you of what's going on and what to expect. And it's
Yeah.
definitely eye-opening for sure.
It is. It's a hot topic in our industry, and we're all dealing with it. You know, the
Yeah.
increased, rates and the just different, companies that are just pulling out of different states, and
Yeah.
And I'm not
it's
immune. I have
crazy.
my own insurance too, and I'm in the
Right.
same boat as everybody else. I just have the little bit extra leeway because I've worked in insurance for so long that I kind of know the
Right.
path and the options and what's a flag and what's a trigger and what can be delayed and what needs to be addressed immediately. So that's why I
Right.
always say if you guys have questions yourselves or your buyers have questions, just call an agent because they'll have the resources to help you out.
Absolutely.
Awesome.
Yeah.
Well, Giovanni, thank you so much for your time and jumping on with yourself and the mustache. We really
Of course.
appreciate it.
Of course.
Yeah, so speaking of, we're gonna have to give you a quick plug though for that mustache. You're doing a fundraiser.
I'm doing a fundraiser for Movember. I'll share the link with you guys. My
Very
goal is
good.
to get up to 2,000 to raise awareness for men's health, prostate cancer, testicular cancer, suicide prevention. So it all goes to a really good cause.
Absolutely.
And I've had family that I've sadly lost to cancer, under 60 years old, my uncle and my cousin. So, if you have time to share or donate, I'd really appreciate it. And thanks for
Absolutely.
the
Yeah, we'll
plug.
put the link in here with this video, and
Yep.
we'll see if we can get some help for you
I
there.
really appreciate that, Jeff.
Of
Thank
course.
you.
Sure. Definitely.
Yep.
Awesome, Giovanni. Thanks again for jumping on. We'll do this again. If you come across any new updates that are happening in the industry that you want to share further, please don't hesitate to reach out to us. We definitely would love to get you back on soon.
Definitely. I'm waiting for the first happy one and I'll be giving you a call.
Perfect. Awesome.
All right. Take
Well,
care, guys.
Thanks so
Thanks,
much.
Giovanni.
We'll talk
Thank you
soon.
again for your time.
Talk soon, buddy.